Hello everyone, it's Wednesday, July 2, and today we'll take a closer look at the euro and British pound charts to assess potential market shifts. The euro held steady through the first half of the previous trading session, buoyed by relatively upbeat data on manufacturing activity in Germany and France. Germany's manufacturing PMI climbed to 49, moving closer to the 50-mark threshold that separates contraction from expansion. Meanwhile, the country's unemployment rate remained unchanged at 6.3%, defying economists' expectation for an increase. The Eurozone manufacturing PMI also improved, rising to 49.5. These reports were welcomed by Euro buyers. Traders also digested the latest inflation figures, which showed the Eurozone Consumer Price Index at 2%, in line with forecasts. The data drew fresh attention when ECB President Christine Lagarde spoke on Tuesday. Previously, she had described a strong euro as evidence of a resilient European economy. Yesterday, however, Lagarde warned that further euro appreciation could weigh on exports and fuel inflation, suggesting that the ECB's monetary policy targeting 2% inflation might be adjusted if needed. Against this backdrop, traders rushed to sell the euro. In addition, Fed Chair Jerome Powell delivered remarks yesterday, reiterating the need for a wait-and-see approach amid uncertainties stemming from President Donald Trump's trade tariffs. At the same time, he indicated that the central bank would consider cutting rates once conditions allow for policy easing. Now, let's take a look at today's macroeconomic calendar. It includes the Eurozone unemployment rate for May, which is estimated to remain at 6.2%. In Italy, the unemployment rate is projected to edge up to 6% from 5.9%. However, these reports are unlikely to have a significant impact on overall market sentiment. Traders may pay closer attention to speeches from ECB officials, including Christine Lagarde once again and Philip Lane. The main focus of market participants, however, will be the ADP National Employment Report. U.S. private payrolls are expected to increase by 99,000 in June, rebounding from a gain of just 37,000 in May. Notably, this indicator has been on a downward trend since March. If the reading surpasses analysts' expectations, the U.S. dollar could regain some ground. Conversely, a weaker result would add to the evidence that the Federal Reserve may need to consider cutting interest rates to support a labor market losing momentum. Turning to technical analysis, the 1-hour EUR USD chart shows that the levels of 1.1763 and 1825 present potential buying and selling opportunities respectively. A decline followed by a false breakout at 1.1763 would generate a buy signal, with the euro likely climbing to a new one-month high at 1825. A breakout and consolidation above this level would pave the way for further gains toward 1875, with the potential to reach 1.1903. At this mark, I would recommend going short on the rebound, anticipating a 25-30 pip move. Short positions at 1875 and 1825 should be considered only in the event of a false breakout. If buying activity remains subdued around 1763, the euro could enter a deeper bearish correction towards 1715, where it would be wise to open long positions on a false breakout. Going long on a rebound would be relevant at 1676, targeting a 35-40 pip upward move. Speaking of the British pound, today's calendar features no significant statistics from the UK, except for a speech by Martin Taylor, an external member of the Bank of England's Financial Policy Committee. However, this event is unlikely to have much impact on the market. A false breakout at 37.51 around the middle of the new sideways channel would offer a selling opportunity, with sterling expected to decline to 37.13. A break below this level could drag the British currency down to 36.78 and open the way toward 36.36. At this mark, traders are advised to go long on a rebound, aiming for an intraday correction of 35-40 pips. Long positions at 1.3678 and 37.13 should be opened only after a false breakout. If bears fail to regain control and the price breaks and holds above 37.51, it would make sense to add long positions, targeting an advance to 37.84 and potentially 38.18. At this level, it would be prudent to go short on the rebound in anticipation of a 25-30 pip move. Short entries at 37.84 and 37.51 would only be relevant in the event of a false breakout. After all, the broader trend remains bullish for the currency. Good luck to all.